Good afternoon, traders and investors. Will back here with another one, coming to with a Friday market recap. Hope everybody had a good day. And in today's markets, guys, well, unfortunately, the sell-off found another gear and accelerated into the morning session. Now, this is off a bad jobs report that we got this morning that showed that the economy is maybe a little bit weaker than people have been expecting, which led to headlines such as these. We are officially now getting our first recession headlines by the mainstream media, guys. And this sell-off today was one of the worst sell-offs that we've seen since 2020 during the pandemic crash. Almost $2.9 trillion in market cap wiped off the S&P 500 at the peak of the sell-off this morning. So it was definitely not a good day at all. Once again, the jobs market sparking most of that fear. Now that we know that the recession narrative is possibly ingrained in the mainstream media, guys, it is very important that we follow this narrative. Now, you may not believe this narrative to be true, but as I've said before, in these markets, guys, it is a game of narratives. You have to follow the money. And what was the money saying today? Well, take a look at the VIX, guys. The VIX spiking the most that it's ever spiked in the last 2 years of trading. At one point was up almost 50%, and this is pretty much your fear indicator as a whole. Where was the money moving to? Because it definitely was not in any major indexes right here. As you can see, they are all red. Where was the money moving into, guys? Well, number one, 20 and 10-year bonds. They had a very nice rally, which is also a defensive positioning move by the markets. Where else did the market move? Another safe haven asset, the Japanese yen, which has been on an absolute tear the last 4 days as the overall markets have been correcting. Gold, however, which is another safe haven trade, gold unfortunately did not move too much, but it is still close to its most recent all-time highs right there, as you can see, right? Excuse me, I got the wrong ticker. So gold near the all-time highs, as a matter of fact, and should continue to perform well in an environment of defensive positioning by institutions. And the only sectors of the market that were up today, guys, number one, consumer defensive, right? So think of all your consumer defensive names. They're actually breaking out, possibly on the way to a new all-time high soon. Another sector that was doing well because of the fierce drop in interest rates today, as the September cut is now pretty much fully priced in. Real estate doing good. And where else is the money going, guys? Well, the money is going into utilities, which is also known to be a very defensive sector in the midst of a possible recession. So that is our job, guys, to follow the money and trade accordingly. In terms of a long-term investor, we're going to get into that as well, right? So in today's video, that was the intro recap. In today's video, what we want to attack right here is going to be the sell-off psychology and the sell-off narrative that's going on right now, and explain what to do, whether you are a long-term investor or a short-term trader in the markets. So that's what we're going to dive into first. Second, we're going to go through technical analysis because we really do need it on a day like this in terms of our major market indexes and see, can the sell-off continue to accelerate, or are we possibly due for a bounce in the early part of next week? And then lastly, cover our big tech names as well and see whether or not some of them meet our buy the dip criteria. So definitely a lot to talk about here today, guys, which is why I'm foregoing doing any earnings whatsoever. We are purely going to focus on the sell-off and how we can manage our positions amidst this current economic uncertainty, right? So without further ado, a lot to talk about today. Let's jump right into it. SPY down about 1.86%. At one point today, they were down over 2%. QQQ at one point was down over 3%, ending only 2.37. But you can see, guys, pretty much all across the board on all major indexes, the market was down, but there were a few bright points that we highlighted in that introduction, right? The bright points of the market: consumer defensive, a few healthcare names, but definitely not a broad market, real estate as well, and that is pretty much it. The rest of the market, guys, really getting destroyed. Amazon, unfortunately, tumbling at one point today, down 14% after their earnings. I don't think they deserve that, but you guys have seen how the markets are punishing anything under perfect earnings. All of your big tech names retracing very hard, semiconductors as well, and even financials, which has been pushing all-time highs as of recently, especially JP Morgan. They had an extremely bad day, to say the least, as we are moving into a risk-off environment. So in terms of the one-day relative, guys, you will see the only sectors performing well: consumer defensive, utilities, and real estate, and healthcare, which was not down too much. Everything else deeply in the red. On the 1 week performance, guys, this rotation is even more accentuated. You can see the only things that are green on the week: utilities, real estate, consumer defensives, communication services, and healthcare. The rest of everything led by technology to the downside, unfortunately. So before we get into more technical analysis, guys, I want to go over something that we presented on the channel roughly about 2 weeks ago, and this is going to be the sell-off psychology. What do we possibly do in these markets? And then we're going to get into why they're selling off right now, but this is going to be paramount for our investing and trading strategy over the next few possibly weeks and maybe even the next 1 to 2 months. So keep this in mind. If you are a long-term investment with an investment horizon of 5 to 25 years or more, never ever sell, guys. You should never ever be selling your long-term portfolios, especially not to realize capital gains tax, right? So you really want to stay invested in the markets. As the saying goes, time in the markets will beat timing the markets every single time, especially if your focus is not trading every single day. If you're just a passive investor, there is no reason to be selling anything. If anything, you should be once again buying the highest quality companies or ETFs and dollar cost average into your favorite names or ETFs with your job's income. Then if you want to generate a little bit more income, you can always sell 45 to 60 day covered calls 10 to 20% above the current price just to generate a little bit of income on your portfolio while the rest of the market is dropping right now. Now, if you are a trader, guys, if you're a day trader, a swing position, or a longer term position trader, this is when most people lose their accounts. So here are some things to do and not to do in times of uncertainty from my 10 years worth of experience in the markets. Now, there's 2 ways to be playing this if you are a trader. If you are trying for long setups, you need to be focusing on quality, the highest quality companies in the game right now. If I was looking for long setups, I'm pretty much only going for the Magnificent 5. Basically, Apple, Amazon, Google, Microsoft, and pretty much our last one, which is going to be Meta, right? The other ones, Tesla and NVIDIA, I would personally not touch right now because both of those favors are out of favor with Wall Street currently. Now, number 2, if we're trying to short the market, trying to find setups for possible put options or just actual shorting shares, we're going to focus on a lack of quality. Think of companies like Nike, companies like Starbucks, companies who have been missing their earnings and dropping a lot, or smaller cap stocks that really don't support the fundamentals that they are built on right now. Some companies that come to mind like QuantumScape or C3AI, companies like that, right? Really companies that are on the verge of possible bankruptcy, don't have very good cash flows, and don't have very high EPS expansion either. So those are the ones that you want to be focusing on if you are short. Focus on these sectors that are currently out of favor right now, and we're going to get into those right away, right? So number 1, do not chase the markets. This is paramount, guys, whether you're trying to trade longs or whether you're trying to trade shorts. Do not chase. If you're trying to go for longs, look for oversold setups on 1-hour timeframes. If you are going for shorts, wait for bounces and then wait for the lower high setups and then take your entries from there. Do not chase. Do not overtrade either, guys, because a lot of people have been losing a bunch of money in the past couple of weeks. The penchant is for us to try and make home runs and try to make it all back in just a few trades or just a lot of trades back to back, right? Don't do this. Stick with your strategy. Stick with A+ setups. Number 3, do not revenge trade. The worst thing you can do after amassing 1, 2, or 3 losses in a given day is revenge trade and tell yourself, you know what? I don't care anymore. I'm just going to trade until I actually make money. Do not do that, guys. Step away, go out for a 10-minute walk, and reevaluate what you're about to do. You are trading real money, guys. These are not paper accounts, right? And oftentimes, I see a lot of people lose their accounts in this environment, and I do not want that for anybody. It's terrible. Number 2, never feel sell shame, guys. If you are a trader and your penchant is always long and you're struggling to find setups on companies that you know very well, you do not have to feel any shame in selling, guys. If you want to sell and take money out of the markets and sit in straight cash until a lot of this uncertainty blows over or until you find better setups in the market, feel perfectly fine to do that, guys, right? It's perfectly normal. Nobody is going to sell shame you. So do not feel any shame by selling. Trust me, we will have more than enough time to be buying these dips. Now, what we're going to do next is you need to follow the money, guys. As I said in my introduction, follow the money. Where has it been going? Real estate sector, healthcare sector, bonds, especially as a defensive trade, utilities as a defensive trade, and XLP, which is your consumer defensive ETFs. Take a look at the names that are in these. If you don't want to trade the ETFs and go with the largest components of those, you should have a fairly good time in a environment where the media is pushing a recession narrative, right? Notice how I didn't say that we're in a recession because we have conflicting data right now. But play the recession narrative, right? Number four right here. Whatever the expected move is for the week, guys, you can at least 1.5x to double it. We've seen this in the past 2 weeks. Stocks are expected to move 5-6% in any given week. They're now moving 10 to 12. So whatever you think the expected move of a stock can be in these times, double it. And that should be your actual targets, right? Now, number 5, we want to manage the risk properly, especially in an environment of uncertainty. Cut down on margin. It is not the time to leverage up on margin right now, and save your buying power for A+ setups, guys. If it is not an A+ setup for your strategy, do not take it. That is how you blow your account. Now, number 6 right here, take out narratives. And this goes especially if you are a shorter term day trader, right? Take out the entire recession narrative, take out all of the narratives, and focus on the price action, guys. Price action will be king. Who is controlling the weekly time frame? Who is controlling the daily time frame, the 4-hour, the 1-hour, and then you manage your entries and exits on the 5 and 15-minute intervals, of course, right? Focus on the price action alone. And you guys know the saying, right? Volatility is a trader's best friend, but volatility is a long-term investor's worst nightmare. So play the volatility, look for price action, do not get married to your positions, and just trade your setups. Now, number 6. Or 7. And if you want to be writing short puts, as I do on the channel, right? If you want to be writing short puts or put credit spreads, I am only going to write short puts or put credit spreads on oversold Magnificent 5 companies. No Tesla and no NVIDIA. The valuations of these are questionable. The rest of the Mag 5 has decent valuations. So I'm looking for daily oversold setups, guys, to be able to write short puts even lower. Because if ever I get assigned on short puts on these Mag 5 companies, I know that I am fine. I'm invested in the highest quality companies in the world, and they are most likely the first ones to benefit from a large bounce. So keep that in mind, put credit spreads as well. The last thing you want to do is get assigned a stock that you do not have high conviction in this type of market, guys. It will drive you absolutely crazy. So don't do it. Focus on high quality companies. And now lastly, a great strategy for now, since everything is pretty much dropping and we have lower high setups, right, is call credit spreads on out of favored names right now. Think small caps, think semiconductors that have been overvalued for a while, and SaaS companies as a whole. A call credit spread, I'll give you NVIDIA for an example, right? NVIDIA, if I'm looking for call credit spreads on NVIDIA, guys, on either a weekly, bi-weekly, or 3-4 weeks out, you need to go with the recent lower highs, especially on the higher time frames, right? Weekly, lower highs. So think in these very high levels right there. And the volatility is so high right now that you can get decent pricing all the way up here. So target the higher levels on setups like that. So that is pretty much everything in terms of the sell-off psychology, guys. I hope that makes sense for each and every one of you out there, and hopefully it's going to allow to improve some of your trading. And obviously, guys, I will be sharing my new updated plays starting next week and how I am going to be playing this specifically. You are going to see we are going to go to very, very few high concentration, high quality positions and make it through this wave of selling off, right? So keep that in mind. Now, in terms of what happened for the data today, guys, well, the data was not very good whatsoever. So let's take a look at the data right now, shall we? So in terms of your jobs, right? So we got that nasty jobs report in the morning, which also came with an unemployment number. Take a look at the jobs miss. We were expecting to add 175,000 jobs to the economy, and we only added 114K. That is a heck of a miss. We have not seen a miss of this magnitude on any jobs report in the last 2 to 3 years. So we definitely have to pay notice now, especially after the abysmal manufacturing report that we got in yesterday's trading session as well. So let's get into it, guys. Job growth totals 114,000 in the month of July, much less than expected, as unemployment rate rises to 4.3%, which is the highest since October 2021. Now let's take a look, guys. In terms of monthly creation of the job in the US, this was your report. Extremely weak, arguably pretty much one of the weakest with the month of April, one of the weakest we've seen in the last 2 years. That is what sparked some fears. And the fears are as follows, guys. Now the criticism is Jerome Powell is possibly too late to cut rates, even in September. A lot of analysts now saying that he should have done it already. This is a stark contrast, guys. The data moved very quickly this week. We got Jerome Powell speaking on the Wednesday session, and he said everything was fine. And to be honest with you, everything was fine. The most recent inflation reports are good, the GDP data was good, and the jobs report were good. Up until this Thursday and Friday, the manufacturing report really put really put that argument into question of whether or not things were good. And today's jobs report pretty much put the nail in the coffin that we might just be on the verge of having a little bit of a problem. Now, take in mind, guys, even though the unemployment rate is at 4.3% right now and has been steadily increasing, well, you just have to understand one thing in terms of your historical unemployment rate. Yes, we are near the lows of your historical unemployment, but there is an economic rule of one of my fellow users on the channel has brought it up, and it's called the SAM rule. As soon as we see a 0.5% increase in unemployment from any level, usually that triggers an economic recession. And Miss Sam, who is the former Federal Reserve economist and also worked as a chief economist at the White House, well, she actually came on Bloomberg TV today and said, yes, the rule has been triggered right now. However, things have not hit the fan just yet, but something definitely needs to be done. So keep that in mind. Unemployment is on the rise, and usually when we have that slight increase, it does in the past history, guys, translate to economic recessions. Every single time it has occurred, a recession has happened. But keep in mind, no two recessions are the same, right? So we can't really compare this time around to 2008, or for the most part, even to 2001. I would say it's a little bit of a mix of both. 2001, because we have relatively high valuations in the AI narrative plays right now. And 2008, because the economy is just a little bit weak. Consumer spending is down, but we still do have good jobs, and the overall economy appears to still being healthy. It is definitely not over a cliff. And it's not like 2008, guys. People are not over leveraged, especially on mortgages or whatnot. And the banks are extremely well capitalized. So we can't really compare. As I said, the recessions, each and every one of them are going to be very different from one to another. Our job is to follow the narrative and be early to it to ensure that we have some time to prepare, right? So that is pretty much everything for your jobs report today. And summing it up, guys, this was a beautiful summation by, pretty much by an article written by Yahoo Finance right here, which sums up the points that we were just talking about. The rout in equities follows a torrid advance, partly driven by bets on a soft economic landing that would keep driving corporate America. While the Fed has been able to successfully bring down inflation, the latest jobs figures may give officials some reason to believe their policies are cooling the labor market too much. Bad news is no longer good news for stocks. I'll remind you, it's very, very funny how the market reacts to these things, right? So prior to this week, anytime we would get a bad jobs report, it would be a green day for the markets. Why? Because Jerome Powell kept saying we need to see cooling in the labor market to warrant an interest rate cut. And now that the cooling of the labor market is finally here with today's jobs market, everybody pivots and said, well, now you're too late. So what is it? Do you guys want weak jobs data or do you not want weak jobs data, right? Do you want the rate cuts or do you not want the rate cuts? So it's very, very funny right now how the market reacts. Now, of course, we're in a period of seasonal weakness, but sentiment is fragile given economic, political, and geopolitical developments. Pressure will escalate on the Federal Reserve. And this is true. He is not wrong, guys. We are in a period of seasonal weakness. August and September are usually known to be weaker months. And you guys know with everything that's going on in the Middle East right now, it just adds a lot of tensions from everywhere, right? Now, Wall Street giants like Citigroup, JP Morgan are calling for more aggressive Fed action. Markets have turned attention from when and how much will the Fed ease to a mindset of growth looks like it's plunging and the Fed is behind the curve. This pivot right here has literally happened in the past 2 days of trading. So extremely quickly, guys. And I'll remind you, right, because a lot of people forget this oftentimes. The markets are not alive, guys. The markets just don't move on their own, right? When we see downside, it's because we have massive sell pressure. When we see upside, it's because there's massive buying pressure right now. So it just goes to show how quickly the markets have pivoted their narrative from the Wednesday session where Jerome Powell said everything is fine to now 2 days later where we've got some economic data that says, you know what, maybe we're not as fine as we once would have thought. So that's pretty much our summary on what happened today, guys. Hopefully you enjoyed that. I know I spent a lot of time on it, but I thought that it would be very, very important to talk about these things in preparation for what is potentially to come, right? You guys know me. I'm usually extremely bullish on these markets, but as I said, if the media is going to derail these markets with a recession narrative, even though I may not think it could be a deep recession, we might just have a shallow recession, Goldilocks scenario, soft landing scenario, right? However, if the media runs with the recession narrative and analysts pour onto it as well, that is what's going to happen in the market. So we need to follow the money. So Moving on into our technical analysis portion of the video, shall we? Moving on to SPY. SPY down 1.86%, QQQ down 2.37%. Let's take a look at how our daily trends are shaping up, right? And we need to play these trends here, guys. So unfortunately, as of yesterday and today, we have now completely lost the new daily trend, uptrend that we had on the SPY, and we have now flushed. So this opens up the doors for the bears to set up for a lower high into maybe lower low. So if I'm looking for a scenario to short these markets further, I first need to see a bounce attempt by the bulls, need to see an hourly uptrend, and need to see some momentum to the upside. Shorting down here, even though it can have continuation, guys, is not the best risk to reward or value proposition. You are shorting into 4-hour oversold, and you are also shorting into barely 1-hour oversold as well. The risk to reward is not very good, and you could get hit with a very volatile upswing and take you out right away. The preferred trade right now, if we're looking short, is waiting for maybe a retest of our prior range of resistance that's above us right now, 538 all the way up to about 542. Pull up into this area could be a decent target for a short, because then we have a lower high to be basing our stop loss off of. Arguably, you can even put it above this little range of support right here at about 549. And then we're targeting lower lows on the daily, right? That's if you're more of a swing trader for a multi-day setup. Obviously, on the shorter term timeframes, it's going to be the same thing, but using very smaller timeframes, right? So unfortunately, right now, the momentum heavily favors the bears, and we are in some very big weekly consolidation. Keep a special eye on 519.65. Come too close to it, and you open the door once again for a potential weekly downtrend setup, similar to the exact same thing that we got in the month of fall, last fall 2023. So 3 weeks of down, we might have a couple weeks of bounce, and then maybe resumption of the downside. It is going to be very, very data dependent. And I'll remind you, now we don't have any more big tech earnings to potentially save us, so keep that in mind. Now, moving on to the QQQ. So the QQQ is selling off a bit more aggressively, of course. Now, daily downtrend was clear as day. The bulls had a temporary daily uptrend going for them, but unfortunately they failed and flushed to lower lows. So now we are coming in to an area of support, which is our pretty much big area of weekly support, similar to the SPY, 448 down to about 434. Now, what's important about these levels, guys, is we need to watch the hourly time frame shift. Hourly, almost oversold, and the 4-hour conditions as well, almost oversold. So we could be getting a little bit of an oversold bounce on the Monday session. I will remind you, keep an eye on the size of the bounce. If we do get a bounce, guys, I would be looking in this area right here, 455 all the way up to about 461. This is where you get it's a downwards breakout, retest, lower high, and then maybe for some continuation. So this is where I like having some entries for some shorts to possibly reload for some downside progression. Now, moving on to the weekly, guys. The weekly definitely not looking very good. This is a almost 100% engulfing move. The entire most recent weekly leg has now fully been engulfed by the bulls, which leads us into a possible scenario where we get the lower high on the weekly into lower low continuation by the bears, similar to exactly what happened last fall as well. Usually these things do take some time to iron themselves out, guys. I would not be surprised if this sell-off does last pretty much through the month of August and maybe a greater portion of the month of September as well. So be very, very, very careful on these setups as a whole, but you have to play the direction, guys. If you are in a daily confirmed downtrend, you should only be looking for short setups. Now, if we make a daily uptrend setup, you can play that, but just understand you are looking for a lower high on the weekly before maybe retesting the lows. So the setups right now should be favoring bearish setups. Moving into XLF financials. XLF really coming undone right here today. Big move to the downside and loss of your daily upside move as a whole. Flushing the lows, guys, now opening up the doors for the bears to set up for a lower high into possible lower low territory. And we'll be watching for that, guys, because we're looking, as of now, for the weekly higher low. Anything above 40.5 is going to be looking for a weekly higher low for possible weekly trend continuation. But take back too much of this move and come too deep into this level of support right here, 41.50 down to about 40.5. Come back too far and you open the door once again for a weekly higher low and possibly even a weekly downtrend on financials leading into the rate cut, guys, and maybe trying to retest some of these lower monthly ranges. So be very, very cautious on financials as well. Usually they have a little bit of a shock coming into these recession narratives, but then when we get into rate cut territory, that's when they really come alive. So I'd be patient on these ones. This one will be a good trade for rate cuts, but not quite just yet. We have to get closer to those rate cuts, and that's usually when these things are going to start to fly. Moving into XLV healthcare right now, healthcare performing better than a lot of sectors out there, only down about 0.2%, and healthcare continuing on its march to daily uptrend highs. Now, we are on the verge of fracturing new all-time highs, so if the bulls can get this break up here, well, the daily uptrend simply continues, and then the bulls create even more space to set up for a new daily higher low, possibly using prior all-time highs as support, backtest, and then possibly run for another leg. Healthcare usually performs extremely well, guys, in a recession narrative environment. So I would be on the watch for some possible continuation by healthcare as well. On the weekly, the setup is looking gorgeous. Continuation of the weekly uptrend. This one is looking better than most trades out there. Now, moving into semiconductors, guys. So moving into semiconductors right now, 5.5% to the downside, guys. And unfortunately, well, we are now below our big area of support that we were watching. This was an important one. Prior all-time highs, we have now unfortunately blasted through. So weekly downtrend is well in motion. Daily, almost oversold, but not quite. But the short-term timeframes are definitely oversold. 4 hour is approaching oversold, not deep, however, and 1 hour just coming off oversold as well. So on the Monday and Tuesday session, guys, we may be looking for a bounce, but keep in mind the word bounce, because that is all we're going to be looking for. There is now so much overhead resistance in this area. I would not be surprised that we may set up for a lower high and possibly into lower low consolidation, right? If in the event we get a daily uptrend formation and the bounce lasts pretty much 1 week or more, look at the size of this weekly move to the downside, guys. I would not be surprised even if we do get some more weekly resilience, just maybe met with a weekly lower high and then possible retest of the lows. Semiconductors will probably be in the washing machine for the foreseeable future, just because valuations on a lot of those companies are extremely high right now. So be very careful and patient while buying these dips, guys. In my opinion, there is a decent amount left to come down on a lot of names out there in the semiconductor market right now. So is it a good time to start buying the dips? Yes, but go very small, guys. We would rather be right? We would rather be a little bit late in terms of positioning, right? So in terms of being a little bit late, if we're buying the dips right here and then we continue all the way down here, right? We would rather be a little bit late in waiting for this confirmation. Nibble. And before we go heavy, we need to watch for that weekly uptrend reversal, guys, because that will probably be the bottom of your monthly move. And then we're going to be due for a little bit more upswing. So if you want to go with more size, wait for the higher time frames to reverse. Until that time, we need to be going small, because nobody has a crystal ball as to where the market is actually going to bottom, right? So we need to be very cautious in the way we manage our purchases. Now, moving into the Russell. So the Russell down 3.5%, guys. And if there's a recession narrative on the table, guys, unfortunately, this trade is going to be completely dead in my humble opinion, right? I would not be touching this right now, even if it did come down in my zone. I'm not going to be playing it, guys, not with these recession headlines, because these companies are arguably, or do have the worst balance sheets in the game, very thin cash flow, a lot of debt, and in an environment where you have recessions, they do just not perform very well at all. So now the Russell really coming undone over the last couple of days, guys. This is a huge top to bottom move, almost 10% in 3 days. Now completely undoing this daily uptrend, and with such high momentum, even if we do bounce in this area right now, guys, any bounce will be met with a lot of selling pressure and possibly going in for a lower low. Even on the weekly, guys, even if we are in a weekly uptrend right now, look at the size of this move and look at the momentum to the downside, right? In one single week, we've taken back over 61% of the move. So the best case scenario for the bulls, which would be improbable in my opinion, would be a tightening range right here. But the worst case scenario would be pulling back too much, lower high, and then possibly lower low, and really diving back into the lower 190 areas. I know it's unfortunate, guys, because this trade was looking very good, but when the data changes, we need to adapt. Do not get married to positions. It is rule number one of investing, other than individual high quality companies that have very large moats, right? But if you're going for a narrative trade, such as a small cap trade, which only performs in a roaring bull market, do not get married to this position. You will just end up with being disappointed. Now, moving into the Dow Jones, give me a second. Moving into the Dow Jones. So the Dow Jones down about 1.5% on the day today. Definitely not a very good day for the Dow Jones, has it, right? So Dow Jones looking a lot like the healthcare, or I mean the financial. Look at these charts, right? Daily downtrend and then the flush. And look, pretty much the Dow Jones looking exactly the same. Daily downtrend, nice rally, and then the flush. So unfortunately, loss of the daily uptrend attempt, and now we may just be looking out for a lower high into lower low setup. So watch out for those lower high setups around the 12 EMA right here, 40,300 for potential follow through to the downside. What are we looking for in the higher time frames? Weekly uptrend, yes, but just keep in mind, guys, this can just continue, and depending on the size of the pullback, it can set up the bears for maybe lower high and then maybe a retest of the lows. I do still think that the bulls have good support down here, 38,500 all the way down to about 37,500. This 1,000-point range is going to be tough for the bears to break, especially because it's a nice monthly uptrend right now, but I would not be surprised if we do come very, very close to it. So keep that in mind, even for an industry or an index rather, that is defensive, such as the Dow Jones, right? We really want to niche down to your preferred sectors. And now, guys, let's take a look at some of the sectors that have been outperforming, right? So based off of the drops in yields, take a look at this massive drop, guys, on the 20-year yield. Finally breaking into monthly downtrending territory. We've been waiting for this for a while. 10-year breaking down monthly downtrend territory, and the US 10-year finally breaking down monthly downtrend territory after being in an uptrend for the last 3 years. So we have to take notice of these guys, which is why I heavily favor a trade like TLT, right? So TLT is 20-year bonds. If you don't like those, you can always go with the short-term bonds, which is ticker SHY pretty much. That's the iShares version of the 1 to 3 year bonds. Either or would be very fine in my opinion. Do not forget, you do get paid pretty much around the 20-year yield. If you're going with this, right now stands at about 3.1% in terms of dividends, right? So you do get some dividends while playing these, but we're looking for some appreciation, guys. We are starting to break out right now. I would not be surprised, because this one is a defensive sector, if it continues to outperform, guys. Usually people pivot from equities to bonds, especially in the midst of a recession narrative right now, right? So that is one ETF that I'm looking at. Another one is going to be undoubtedly XLU. XLU has been one of your outperformers ever since the last 2 weeks of trading, right? Really starting to get some momentum on this weekly uptrend. And even the monthly uptrend, guys, is looking gorgeous to potentially come back above the all-time highs. That is because when rates are going to start coming down aggressively, these things still pay very decent dividends, and they're a more defensive sector, right? People always have to pay for their utilities. So that's why it's one of my favorite trades going into this interest rate crush environment. And another sector that I'm looking at, guys, well, actually two more, right? One of them can be XLP. So if you guys don't know this one, this is consumer staples. What is in consumer staples? Well, I'm glad you asked, guys. Let's have a look, right? So these are your consumer staples in this ETF, and you will see that they're very defensive companies with very high weights. Procter & Gamble, Costco, Walmart, Coca-Cola, Pepsi, Philip Morris, which is a tobacco company, guys. Very simple, right? Even though you may not like tobacco companies, you cannot deny, guys, that when there's no recession, people smoke. When there's uncertainty and fear around people maybe losing their jobs, do you think people smoke more or less because they're stressed out? Probably they'll smoke more, right? So that is why Philip Morris usually does well, which is usually why alcohol companies do well in this environment as well. You can go through this list, guys. It's more of a defensive holding right there. This sector should continue to be an outperform. And the last one, which is a funny one, but don't get married to this one too quickly, right? This is going to be real estate for the same reason. Usually real estate pays very high dividends right now, and usually is a more defensive sector leading into the initial phase of a recession. But be very careful with this trade. We do not have that much time on this trade, because the tail end of a recession narrative always ends, even if interest rates go down, guys. If people lose their jobs and wages come down and people are already stretched for purchasing power, do you think more homes are going to sell or less homes? Obviously less homes, right? So be very, very careful with this one. My favorite play in this index right now is Vici, but still, this one can have some legs, but be cautious if ever you see that weekly reversion come into play. That's why it's the last one on my list, guys, but still could be a good candidate for some swing trading action. Especially if you're a day trader, right? These daily uptrend locations usually are very, very solid. So there's just a few of the names that I'll be looking into playing for more long-term setups with a little bit of, not long-term, but long trade setups with a little bit more size, because they don't usually move that quickly in either direction, and the bias is up with the recession narrative. So keep that in mind, right? Gold is also a decent trade. The only problem with gold is it doesn't move too much, but it's great for day traders, right? But unfortunately, you probably make more yield if you go with other ETFs more than trading gold itself. Gold is really good if you want to do some swing trades as well. I would not be surprised if this one continues its march higher as we move into this election uncertainty and possible recession narrative. So moving on in, guys, now let's cover some big tech names, shall we? So moving into Apple right now, Apple up about 0.69% because of their earnings, of course. They were actually up over 2% today, but retraced and gave it back all, right? So looking for potentially the daily downtrend continuation, guys. Keep a close eye on these levels right here. 215, break 215 next week, daily downtrend resumes, and we are in official weekly consolidation continuation. Keep an eye on your weekly higher low, 207.34, guys. We've come down a decent amount from the highs, right? Down now over 50%. If the bulls give back too much of this move, we could be setting up for weekly lower high into weekly lower low, similar to exactly what we did last fall, right? Weekly lower highs, and now could be due for some extended consolidation. Looking on the monthly, that would not surprise me here, guys. If we do consolidate maybe for 1 to 2 months and bring us down on the monthly back into this big range of support, 201 down to roughly 190. That's going to be the range that I'm looking to play Apple on right now, but I'm not playing it right away. Why? Not daily oversold conditions yet. And also the valuation that we did yesterday after their earnings, guys. Very high valuation for relatively low revenue growth. That is why I'm not playing Apple right now. Even though it is one of my favorite companies in the market right now, I need a better discount. This is just not enough. 8% from the all-time highs, not enough for me. Going to be extremely picky. We're going to go through this list and you'll see what I mean by that. Now, moving into AMD. So unfortunately, AMD tried to stay green today. They were up 2% for a majority of the day, but they could not get it done, guys. AMD just continues to slide with the rest of the semiconductor industry, right? Unfortunately, daily downtrend now resumes with a new leg. And if we get a bounce, we're just maybe looking for a lower high into lower low scenario as this sector remains out of favor. And people keep talking about the AI bubble, the AI bubble, the AI bubble. Well, whether you believe that to be true or not, if that is what the mainstream media bases this sell-off on tech into, well, they are going to push these things down. So whether or not you believe that these stocks are in a bubble or not, they will be affected by the narrative that the media is portraying. It's all about the narratives, guys. You need to remove, sometimes when there's an overpowering narrative in the markets, you need to remove your personal bias and focus on what the money is doing, right? That's why I don't do politics. That's why I don't get into narratives too much, right? Just follow the money. That's going to be the case in point. So moving on to the daily downtrend, right? If we do continue to the downside, keep in mind we are approaching daily oversold conditions. And on the weekly as well, guys, the weekly is just not looking too good. It was a gorgeous weekly uptrend, and now we flushed pretty much everything. So in the event that we start to get a little bit of a daily bounce underway, a little bit of a daily uptrend, maybe moving into next week with daily oversold conditions, we're just going to be looking for a weekly lower high and then possibly revisit, guys. I would not be surprised if the bounce is very, very weak on AMD, and then we may just be revisiting the lows. If we continue plunging all the way from here, you guys know where the next area of support is, 117 down to 106. This is where I start going a little bit more aggressive on AMD just because of the valuation, guys. So yes, this one is still out of favor. Yes, it's going to be in a weekly downtrend. It is in a monthly downtrend as well, but this is where I'm looking to start some positions on AMD, just because the valuation will be pretty good. And at that point, guys, we maybe even are going to trigger some weekly oversold conditions, which is usually a good position to start buying into companies that you like. Moving into Amazon right now. So Amazon trying to recover as best as it could today, but the market was just too strong to the downside. But it did a good job coming off the lows here, guys, at about 161, right? So Amazon, heck of an earnings drop. So let's take a look at the hourly. Hourly trying to form an uptrend. We will see if they can confirm this bull flag into an hourly uptrend into the Monday session. If we do, guys, I will remind you with the size of this drop, we are most likely just looking for a lower high, and then it's up to the bulls to really protect the downside, right? But we are looking out for the lower high. Keep an eye on the size of the bounce and the overhead resistance, which is pretty much sitting 180 down to about 175. This whole location right here, that is going to be maybe where the bounce gets rejected, and then it's up to the bulls to either be able to set up for the higher low and change this daily uptrend, or if they never even get there and the bounce is weak, think 38% bounce, under 50% bounce, may just be rolling over and retest the lows. One thing is for sure now, guys, Amazon has hit my buy criteria. Anything under 170 is a buy for me on Amazon. And if ever we continue the downside, guys, well, the next big area that I'm going to be looking for is this one right here, 145 up to about 150. This is going to be an extremely heavy add for me on Amazon. So over here, it was nibble. This is still a little bit of a nibble. If we come down, nibble, nibble, and this is where I start to go in with a little bit more size on Amazon. That would be a heck of a drop, guys. That would be a drop of over 27% on a beautiful company. Even though earnings were not well received, the business is doing very, very well right now. So that's why I like it on Amazon myself. And keep in mind, we do have oversold conditions on the daily right now. So next week when it starts, I may be looking to write some short puts in the lower 160 range below these oversold conditions, the bottom of today's trading. So I do not mind playing oversold conditions on the Magnificent Five: Apple, Amazon, Google, Meta, and Microsoft. That is it. That is all, guys. That's the only short puts that you are going to probably be seeing me write over the foreseeable future because they are my highest conviction stocks. I mean, I have many other higher conviction stocks. The problem with a lot of my other higher conviction stocks is the share prices are so high, it's tough to write short puts, right? Like Costco, $800. Companies like SPGI as well, and other things like that, right? So hopefully you guys understand. Moving into Google right now. So Google also coming into possible daily oversold conditions, not there yet, which is why it's one of my swing trade candidates if it does get down into those daily oversold conditions. That being said, daily downtrend clear as day, daily lower high is set, and we are maybe marching on to lower lows. If for whatever reason, guys, we bounce, we'll be watching the size of the bounce, and if we can break above 176, that would be resetting the daily uptrend. If we do reset the daily uptrend, just keep in mind, huge weekly move down, guys. We're just going to be looking out for a weekly lower high and possibly further downside continuation if this recession narrative does maintain. Now, big overhead resistance above us. That is 180 all the way down to about 171, right? So unfortunately, this was support before. Now it's resistance, so we have to understand that. Google is now down from the all-time highs 14%. So this location right here is a nibble. If we come down into the mid 160s to 160, another nibble at the 160s. Now, the back up the truck location for Google for me right now is 155 down to about 145. If we come all the way down there, guys, that is the big area of monthly support. Prior all-time highs, prior resistance right here. Could be looking for a monthly retest of this range right there. And maybe that is when we bottom out for the continuation of Google's bull run right there. That would be a drop of 20 all the way down to about 25%. Usually that is the best time to go heavy on Google, in my humble opinion. The company had great earnings. I see no red flags at all. So right now with daily oversold conditions, am I possibly, if we get some further downside follow through Monday and Tuesday, am I looking to write some short puts 160, 158? Yes, absolutely. And if we come down even lower, I'll be looking to get even more. So that's how I'm playing this. This one does respect my conditions for daily oversold. So looking to make some plays on this one. Now moving into Meta. Meta down about 2% on the day, still trying their best to protect this daily uptrend, right? The problem is now the bears have taken back a lot of that earnings move, coming down almost 75%. Usually when you see a 75% retracement, guys, it is excessively difficult for the bulls to just V-shape, especially in market conditions like this. So if Meta also rolls over, we might just be expecting a lower high into lower low scenario. If that does play out, guys, we will be looking for maybe this weekly high being set and weekly downtrend rollover. Now, Meta, if we're looking for Meta for my extreme buying opportunity areas, right? This area right down here, 470 to 450 is a nibble location. As a matter of fact, you guys saw me do it last week. I did nibble on Meta prior to their earnings down in this location right here. However, if we fall even lower to last earnings cycle lows, talking about 420 down to about 400, this location right there, if things get really bad and we look for further monthly consolidation on these markets right there, keep in mind their earnings were amazing. That's why I am a firm proponent of buying the dips on this one. We are not yet in daily oversold conditions. So for now, it is just a nibble. Can't really play short puts. If we come all the way down here, guys, I'm going to be writing some short puts, probably 420 all the way down to 400. At that point from the highs, Meta would be down roughly anywhere between 24 to 28%. If it happens, it's usually been a great time in recent history to be buying Meta. Anytime it dips in the context of an overall bull market, which we're still in right now, 16% to about 25%. Usually that is the extent of Meta sell-offs. So I can't wait to buy some dips on Meta down here. But we need to be patient. Do not blow all your capital too early, guys. You will regret it. Moving into Microsoft right now, Microsoft down 2.07%. And look what we have here. Daily oversold conditions on Microsoft. How often does it happen, guys? Well, let's go back in history and have a look, right? It has not happened this entire year. You would have to go back to some areas in 2022 when we hit oversold conditions, and we usually got some fairly significant bounces, even in the context of bull markets. Sorry, it might be a little bit small. Let me zoom in here, right? So we had one here in October of 2021. Daily oversold conditions barely on Microsoft and generated a fairly decent bounce. Microsoft does not hit daily oversold too often, which is why I do deem it to be a great location for some potential long setups. Couple that with the fact that we're at the 200-day moving average and coming up into a large area of support on Microsoft, guys. 402 down to about 392. Huge area of support, daily oversold conditions. Swing trade on Microsoft, little bit of a nibble. Absolutely, yes. Now, for larger size positions on Microsoft, now Microsoft is down about 14% from the all-time highs. Microsoft usually drops less than the rest. You can find dips of about 15, 12 to 15%. And Microsoft is pretty much almost there, right? 13% from the all-time highs now. But it may not be the last opportunity. As I said, guys, Microsoft has now lost the weekly uptrend, total engulfing move right there. So even if we bounce, we have overhead resistance right here. Could just be a setup for a lower high into a lower low and retest this area once again. So you may just get a second opportunity. So first time touch, for a bounce play, yes, but just do not forget, guys, that we may be setting up for a weekly rollover in context right here and maybe further monthly consolidation on these charts as well. So that's why I say you will have some opportunities, so keep that in mind. Dip buying opportunity here, yes, and as we fall lower and lower, guys, I'm going to be nibbling, if ever, and this is a big if, guys, because this would be a huge sell-off on Microsoft. If ever we come down 20% on Microsoft and touch the prior all-time highs right down here, right? 364. Keep in mind, we'd be giving up all of the yearly gains. This is things get really bad. This is going to be a location where I really back up the truck for a huge Microsoft position. So keep that in mind. Moving into Netflix right now. So Netflix down about 1.79%. Netflix just grinding the levels lower, right? So very, very tough to get a little bounce underway right now. Keep an eye. We're coming into our last area of support. This is pretty much 605. If we lose 605, guys, the next stop is all the way down here, 572 down to about 550. This location right here, coupled with the 200-day moving average. So far, Netflix, unfortunately, a little bit weak with the rest of the market and also sacrificing the weekly uptrend in the process. So if ever we get a oversold bounce, because we're almost there on Netflix, if we get an oversold bounce into next week with a new daily uptrend, we'll take this one day at a time, guys, right? If we do, we'll get a little bit of a weekly bounce, but do not ignore the fact that we can set up for a lower high into possible lower low rollover. Netflix for me at these levels right now could be a decent little position to nibble on this dip. But if we come down here, guys, 570 all the way down to about 523, this is when I'm going to be buying Netflix for my longer term portfolio a lot more heavily. So we need to be patient. That will be a drop on Netflix of anywhere between 18 to 25%, usually a great opportunity to buy. Now, moving on to NVIDIA. Now, give me a quick second for this one. So NVIDIA, how far the great have fallen so far, right? So NVIDIA, unfortunately, still down about 23% off the all-time highs, guys. And just keep in mind, I personally think that NVIDIA, when they have earnings at about a month's worth of time, they're going to have fantastic earnings. Nothing is wrong with the company per se. What is wrong surrounding the company is the narrative that unfortunately it started. It started the AI ramp narrative. It is the largest proponent of that trade. So if Wall Street starts de-risking that trade, and if the media starts clamoring for an AI bubble, well, do not be surprised if even though NVIDIA has fantastic numbers, which it does right now, even though it may just sell off, guys. You guys know market irrationality can go any single direction. Markets can be irrational to the upside sometimes, and they can also be irrational to the downside. Never forget that, right? So NVIDIA, in that context, being in an out of favor or a trade that's going more and more out of favor, well, NVIDIA right now has been overvalued for a while, guys, at over a 2 peg. So maybe we'll be able to find NVIDIA at better valuations, and then I totally agree that we can definitely go shopping. But for now, it remains in a sector that is out of favor. So daily downtrend underway on NVIDIA. Daily downtrend, unfortunately, was overtaken by the bulls in one day and as quickly reversed on the next day. Extremely challenging couple of days for NVIDIA. That's one thing for sure, right? So if the bounce does continue to have some legs into the Monday session, keep an eye on the hourly uptrend. If we get some further uptrend continuation, guys, in my opinion, just looking for a lower high, possibly for lower low continuation, further and further into this big range of support. We have a big gap right here from prior earnings, 102 down to 94. Pretty sure that NVIDIA will be filling this gap over the next couple of weeks. So keep that in mind. This is the big area of support, and we are now in a big weekly downtrend. So even if the bulls eventually come up with a daily uptrend out of this, you will know that we're eventually just going to be looking for a weekly lower high into possible lower low conversion. Now, we may just bottom out here, then there might be a little bit of a run up into earnings. The timeline would be perfect, right? Earnings are pretty much at the end of the month. So maybe one more week of possible downside, and then maybe a pre-earnings run up, and then earnings happen. People say, well, we thought there'd be better growth. Look what happened to all of big tech this sector, right? And then maybe NVIDIA just may fall even further thereafter, right? So that is the problem that I'm finding with NVIDIA right now. Now, in terms of my buy locations for NVIDIA, target number one is going to be 94. 94 for me is a little bit of a nibble. Where do I start buying very decently on NVIDIA, guys? In the $80 range. Now, I know that sounds low, but that's just the fact of the matter, guys. The next big support ranges are down there, $80, $75. That's where I start getting a little bit more heavy on NVIDIA, and that would be a heck of a sell-off, guys. That would be a almost 45, 50% sell down from the all-time highs on NVIDIA. I'm not saying it's going to happen. I'm just saying if it does happen, what am I going to be doing down there? Because if NVIDIA comes down all the way down to here, guys, you guys know what everybody's going to say. If it comes all the way down to here, right, fast and hard after earnings, you guys know what everybody's going to say. The story for NVIDIA is over. It was overblown. The AI was in a bubble. There's no reason it should be there. And that is when you want to buy a high quality company that at that point will have far better fundamentals and will be pretty much fairly valued, right? Because that is, I know a lot of people don't want to hear it, but 82, 85 is fair value for NVIDIA. So it's been overvalued for a while. I'm not saying that stocks can't be overvalued for a long time. They definitely can. But eventually we could have some mean reversion. So that is just where I'm looking for this trade on NVIDIA. Keep in mind, that is pretty much where your monthly higher lows are sitting for the stock. So if they come all the way down there, may take us a while to get out, but 2025 should be a roaring year for them. So I'm looking to get some shares before 2025. Now, moving into Tesla, guys. Tesla obviously falling off a cliff right here. So daily downtrend is confirmed at this point, reiterated by the fact that the weekly is in a very large form consolidation. We're coming into the moving averages hot, guys, coming into the lower areas of this support range right here, which is pretty much 205 down to about 200. The bottom end of this green box that I've labeled on the chart, that is your last line of defense. The moving averages are sitting there too. If we lose this in one clean shot, it'll be not looking too good for Tesla bulls, guys. Then it'll be 100% engulfing move almost. Already, the bears have taken back a lot of ground, guys. We've taken back over 60% of the move, which pretty much rules out the V-shape entirely. The best they can get is maybe a tightening range, and the worst that can happen is the unfortunate weekly downtrend rollover. So we're going to take a look at this one day at a time on Tesla. Unfortunately, I am not going to be playing this one, guys, in a recession narrative. Right? What's the one thing that people pull back on during recessions when they're fearful of losing their jobs, perhaps? Well, that is big ticket items, and think cars and houses, right? So those will probably not be in favor, which is why I'm not going to be touching Tesla. The only time I will consider touching Tesla, guys, is depending on how we react from the 180, 170 zone. If we get there, prior to that, I'm not touching it whatsoever. Maybe, as a matter of fact, if we do get a little bit of a bounce on Tesla, I may just be looking for the lower high, short, and then for some downside continuation. That'll be the only consideration for Tesla. Now, moving lastly into Palantir. So Palantir having a terrible day today, down at one single point, guys. Palantir was down a ton. They were down almost 9% on the day before finishing, roughly half that, about 5.25, right? So unfortunately, what we said was probably going to happen with Palantir did happen. Unfortunately, Palantir is a beautiful company. Fundamentals are gorgeous right now, but they can't do it on their own, guys. If the rest of the market is selling off, do not expect Palantir to hold up any gains whatsoever. So daily downtrend is now underway. Palantir has earnings on the Monday morning session. So no real catalyst until that time. Price action aren't entirely going to be dependent on their earnings, and usually earnings moves 8-9% either way. So a 9% beat to the upside could just put us at our most recent highs, and then we'll have to see how they react to that. Can we get above them and reset for a daily uptrend, attack the 28s, or are we going to fail and just head into further consolidation, right? Just as AMD did, and just as Apple did today. They gave back all of their earnings gains. Meta as well did the same thing, right? So if earnings are bad, however, and we go to the downside, well, keep in mind 9% to the downside would put us back in my sweet spot, which would pretty much be the $22 location. I'm going to be patient on Palantir just because I said it cannot do it on its own. If it gets dragged down, I'm pretty sure it's not going to be because the company's doing something wrong. It's because there's going to be something wrong with the overall market. So with that in mind, keep in mind we are still in a weekly uptrend, taking back a lot of the move. And if we give back any more, guys, I'm going to be going shopping in the lower 20s. Think 22 all the way down to $20, my desired location for shopping on Palantir. That would be a sell-off of roughly 20 all the way down to about 30% on such a gorgeous company, guys. And we do have a lot of space on the monthly still. That would be just targeting for maybe a retest of these monthly lows right there before maybe putting in a tightening range pattern, and then maybe embarking on the rest of our journey in the later part of the year after the elections and maybe into Q1 of 2025. So be patient with Palantir if you want to be averaging into it, guys. Let the market come to you on your favorite stocks. That is the moral of the story, right? So that is pretty much everything for today's video. I hope you guys appreciated the emphasis on the rotation, a couple names out there, and the psychology behind the reasons of the sell-off, and what we can do as traders and investors to really manage our risk and manage our trading strategies accordingly. So if you enjoyed today's video, guys, would really appreciate it if you give me a like for the growth of the channel, and also subscribe to the channel if you're new. We do these every Monday to Friday after the close, so hope to see you back for some more. And then lastly, guys, if you have any questions at all, especially in this market, please leave them down below in the comments. I will be answering a ton of comments tonight, so keep that in mind. If you have anything you want to ask me in terms of positioning, in terms of trade ideas, setups, anything you want, guys, I'll try to do my best without giving you direct financial advice as to what I would do in that same position. So thank you very much for watching, guys. I love you. Keep your heads up. We are going to get through this. In my opinion, it is going to be, if we do have a recession, it's going to be a more shallow recession than the ones that we've previously seen, such as COVID, such as 08, such as 2001, right? There will be a lot of trading opportunities. So it's time to get excited, guys. I know it feels very, very painful right now, but we have to be excited. This is all about reverse psychologies of the markets as well, right? You can't want to be buying things when things keep pushing all-time highs, right? When things keep pushing all-time highs, a lot of comments and a lot of people say, well, I'm going to wait. I'm going to wait for a big dip because I think things are overvalued right now. And then when the dip finally comes, people get scared because they get scared that the markets are going to completely do something like this, right? No, you've been waiting for the dips, guys. So now that we have the dips, it's time to start buying. If you have $10,000 to be buying the dips, guys, right? Do it on a weekly basis. Now we're having some shallow dips, right? So every week for maybe the next 10 weeks, maybe you throw out of that 10,000, maybe you do 1,000 a week, and be very selective with what you're buying, right? 1,000, 1,000, 1,000, 1,000 for the next 10 weeks worth of time. That's over 2.5 months, right? So if you're always doing something like that, it's going to be a very worthwhile strategy for you. Or you can do what I'm doing on Big Tech. Target percentage increments. You see Google, Microsoft, stuff like that, down 10, 11%. Maybe that's when you average into it $1,000. You see it down 15%, you go a bit heavier, maybe $1,500. You see them down 20%, that's when you go in with $2,000, right? So we want to build positions heavier and heavier as they decrease. Only high quality companies, because they will be the first to recover when we are on the other side of this, guys. All right. So keep that in mind. I love you guys. I'll see you over the weekend on Sunday night for the top 5 options plays of the week. I apologize, won't be here tomorrow. Have some family things to take care of. And in the next week, we're going to be focusing a lot on the trading strategies and what type of names we're trading, what type of strategies we're using with options and stuff like that, right? So we're going to be focusing heavily on the trading. I'm going to try to help you guys as much as possible, right? The goal is to not lose money or lose as little money as possible throughout this sell-off, right? So that is going to be the gist of things. We're going to make some money, and then maybe our long-term portfolios are going to take some hits, but the goal is to be taking, the best risk to reward trades out there in the market. So keep that in mind. Take care, guys. See you soon, and peace.